let's focus on going forward. And what do you see as the one or two things that are the most important to Roger Altman over the next couple of months?
Well, I don't know how you could have overall a more favorable macroeconomic environment, given where we were 3 years ago, than the one we're seeing, including captured in this morning's economic data. Look at what we saw. The economy is, the growth rather, is resilient. Looks like real consumer spending is going to be up about 4% for the quarter just ending tomorrow. That is remarkable. Personal income was a touch softer than expected, but still okay. It looks like the next monthly jobs number, you just mentioned that, probably going to be around 200,000 positive. Overall, a very resilient, solid picture. On the other hand, inflation is progressing in the direction everyone wants it to. You saw this morning that core PCE and PCE both running around 2.5%, getting closer and closer to the Fed's long-term 2% target. So you have the soft landing playing out quite vividly, Brian, right in front of us.
Yeah. I do wonder, though, I know, listen, again, we always talk about the jobs number. I get it. It's a big deal. But then when they revise it down 818,000, you kind of wonder, why are we paying so much attention to the jobs number, Roger, when they keep revising it down or up? However they revise it, they change it. But that said, I hosted Squawk this morning, and we had former Fed official Jim Bullard on. I don't know if you caught it. And I kind of dove in with him, and I asked him, all this debate about inflation, people blaming price gouging, whatever, how much the 2021 spending package and PPP loan money impacted inflation. Here was his answer. Listen and respond.
March, April 2020 response to the pandemic was big, and it was meant to be big, and I think it avoided a financial crisis. But then you got another package passed by Congress at the end of 2020 in December, bipartisan, very large. That was because of the Georgia election. And then again, when the Democrats came into power, as probably any party coming into power, they wanted to do something, so they passed another package. It's those two last packages that were overdone. And that's what led, right after that, we got a whole bunch of inflation, and we're still keeping the policy rate, very low in that environment. And then we had to scramble in 2022 in order to bring this under control.
Roger, do you agree?
Well, not entirely as follows. I think he's right that the total of the three stimulus packages that were passed legislatively in response to COVID, in retrospect, were too big, especially the last one, which he mentioned, the American Rescue Plan. But were they the main cause of the inflation surge we saw, Brian, in the midst and coming out of COVID? The answer to me is no. The pandemic and all the supply chain impacts and others is the primary cause of that inflation. Did an overly large federal response contribute to that? Yes, but it wasn't the main cause.
Yeah, but when you sprinkle all that money from the sky, right, whether it's stimulus, whether it's PPP, or whether it's indirectly ultra low rates that just basically drive people to borrow money, combined with all those pandemic level shortages, that would seem, I would imagine that was at least gasoline on the inflationary fire.
Yes, it did contribute, but it wasn't the main event. When you step back and remember, Americans were stuck at home. They were receiving checks from the government. They were actually quite liquid. They couldn't spend on a series of categories they typically did, like going out for a meal or travel, and they spent, therefore, on items they could spend on, and initially that was durable goods, a new bike, a new grill, home renovation, and so forth. The demand for those durable goods skyrocketed. Supply chains, which were disrupted already by COVID, couldn't keep up. There was a surge of inflation in durable goods, and then when the economy began to reopen and people could start to enjoy certain services they'd been blocked from, then that bled over into services inflation. But it was all those disruptive effects of COVID that were the main cause of this inflation, which we're now coming out of happily, at least in my view, Brian.